Okay, my Forex family, this is Sidney Guajardo coming to you live from San Antonio, Texas, and we are the trading places. Let's get going here. Let's go find some trades. All right, here, what do we got? Okay, so I'm in this trade now. I'm in pound yen, but let's go to some charts here. Let's look at gold. Put this down here. I like that. All right. All right, let's see where we are. Let's move this over here. I always like to put a horizontal ray that has the numbers to find out where we are. And a vertical line right there. So we can pinpoint. I have a timestamp of when we actually got in the trade. Okay, so let's kind of get started here. Gold is at 1817.75. I'm going to do a little bit of chart training, but I also want to get into the indicators and how it works. But all the indicators for my advanced students, they indicators are good. Okay, this is all based on algorithms here. These signals here are indicators. And what the problem with indicators are, it's a lagging indicator. You really can't, it's already when the trade is about to happen or has already started happening. Like this one here was in a downward trend and then the signal came out. There's just no way to predict that. So but usually after the third candle, you know, you can get in it, you still can make some profit. Like for this one here, you get in here and look how far it went up. So, but if you learn how to read charts, you can get in right here. Okay, so let's go over this. What we're going to do this week is just basically learn how to use the indicators. But since we're on gold, let's figure out. Let me put my keyboard up here. 1 second. Okay. All right, so when you're looking at a chart, you want to look at, let's put this down here so we can make sure. This is where we are, and we want to find out where the highest point was. And the highest point on this 120 is a good starting point, okay? So, you know, get on your King Solomon chart book, and all you got to do is go to the middle of the screen. Let me get this out here. Go to the middle of the screen and just put 120 minutes. And then this will pop up. And you could tell when you're on the right one when you see 120 right there. Okay. So let me erase this. All right. So let's find our a horizontal line right here, and let's see where the highest point is. Right there. That's the highest point. The money hasn't been that high since since today. So gold happened to be well over 1800 at the highest point today, which was right there at 1817.91. Can gold or any trade pair go higher than that? Yes, it can. Okay, but let me. Anything's possible in Forex, but right now I'm just showing you how to read charts. Okay, so what you want to do is go to the highest point, which was right there, and then you want to go to the lowest point right here. Okay, now anytime there's support and resistance, like let me show you some support and resistance. You're not going to find any support and resistance here unless you go further back, but it's going to be you have to go way further back because gold hadn't been at 1817 for a long time. Okay, so what you want to do is get your horizontal line and find out where money has met before. Like right here, here's a good line right here. Do you see kind of how like in this area here, let me put my spotlight. Do you see kind of like right here? The money came up and bounced it and came back. This one here, the money tested it, went through, and then it came back. Okay, but this is a very good resistance line because it hit once, twice, 3 times, 4 times, 5 times. I'll count that one. Okay, 5 times on the resistance, and on support. Support is when the money's on this side of the line. It came back. So you know how when they say you could tell when it's love when you set them free and they come back to you? Okay, that's kind of the way money is. Money always comes back somehow to support or resistance. Okay, so when you're tonight when you're home, if you're a beginner, what I'd like you to do is pull up any trade, any chart book, and put any trade in there. Put gold, US 30, euro, dollar, and start looking for support and resistance where it hits and comes back. Let's find another one. Is this one? Yeah, that's a good one. Look at this. It hit once, twice, 3 times and bounced. It went above it, came back, and then it went down. Okay, there's another one there. There's another one there. There's one there. There's another one there. And there's one, and on this side there's support. Okay, you can mark up the chart so many times. And to get rid of them, all you got to do is just erase lines. So let's try and find out at what point this is going to come down. In Forex, whatever goes up must come down. Okay, so at this point, it went to its highest point about 2, 4, 6, 8, 10, 12 hours ago. So at 6 in the morning, it hit its highest point and then came down. So right now, you do have an overall trend of going north, right? But it hit its highest point and it looks like it's coming down. So we need some volume, and Sydney, Australia just opened up. Let me see if it's done anything to my trade. Okay, hasn't really. My trade's moving south. I took pound yen going short. So this is called trend reversals, and I took this on a trend reversal. So it should start. We basically trade with trend. That's the kind of traders we are. So, but this is more of advanced strategy. But I'll go into that later. But you see how it went up? It went to its highest point and then it came down. Well, right now it's in consolidation. It's kind of moving sideways. So we need more volume to tell what it's going to do. Another way you can tell, let me erase all these things right here, is you have these Bollinger Bands. This is the top of the Bollinger Band, this is a moving average, and this is the bottom of the Bollinger Band. This is definitely going north. Now, it could bounce off this moving average and continue to go north. If I was strictly just betting on gold and the trend, it's going to continue to go north. Now, right now, we're dealing in very volatile times. Okay, so usually when gold is going up, US 30 is going down. US 30 is the stock market, the New York Stock Exchange. Let's just verify that real quick. So you see how gold was going on an uptrend? This one's going on a downtrend. But that's not always the case. So, but normally when we're in normal times, US 30 will go short when gold is going long. So there's been several times where I'm in gold long and US 30 short. So that's what you kind of want to look at. Let's get back to here. So let's see here. If it's really hard to tell on this trade because there's not really any type of it's not doing anything. It's at its highest. The only thing I could tell it's up on an uptrend. But if I take gold long, we're asking this trade pair to create new highs. And when I say new highs, I mean this. This is the high it's ever been several hours ago. And already we're starting to see red candles. So even though it is a long trend, look for gold to go short unless something major happens. Right now, there's all currencies are based on supply and demand. The dollar is based. We're printing money like crazy right now, and that should really make the dollar weak, but it's not. We're seeing job growth. We're seeing a lot of different things and things that shouldn't be happening during a pandemic. But there's also reports that, the CDC is not making accurate claims. So it's very difficult to see a lot of the New York Stock Exchange under normal times. This would be going crazy. I remember when we had our first bailout in 2008. I mean, the New York Stock Exchange had to shut down for several hours because it went too low. When we had our first outbreak of coronavirus, the stock market did shut down, but it was only for a day. It went down to 18,000, which is still extraordinarily high. But when you're talking about a global pandemic where potentially at the time everybody thought everybody was going to die, that's how strong the dollar is. It only went to 18,000. It's been going up ever since. Where are we right now? Like 25, 26, 727, and it's climbing. It is an overall downward trend, but it is climbing. So the stockbrokers, I think they have their losses already like pre-packaged in their deal, so that it doesn't take such of an extreme up or down. But gold and US 30 are very hard to trade, to predict where it's going to go because of the volatile times. So let's go to $1.30. Let's see if we can find something there. All right. So euro dollar has been doing very, very well. Look at that. It's on an uptrend since July 10th. And normally it goes up and comes down, goes up and comes down. But this little sucker here has just been climbing and climbing and climbing. So let's find out. It's at its highest high right there. Now, last week I saw this and I said that euro dollar was going to fall because it was at as high as it's ever been, and it did. But look at that, it's been climbing, it went down, it's been climbing ever since. So if you are going to take euro dollar at all, I would wait for some volume and I would start waiting for some short signals because it's at its high as it's ever been. So do you want to take your chances? And like right now, here's a short signal and it went down, but then it went back up and there hasn't been any signal since. So this is kind of one of the trades that I'd want to hold on to until we get some really good, strong short signals. And we can, just going to take some time. So let's go down to the 60. Here's some short signals. The reason why the Bollinger Bands are kind of closing in on one another is because the market just closed. So there's not a lot of volume. So I would definitely wait to see what the market's going to do before we take euro dollar, and this is probably going to be the ones that I'd wait to go short on. So just wait for some signals, these little purple signals right here, to go short. And so if it does, it's going to go short a long way. So always trade with a trend. Okay, so we went over this chart training real quick, the highs and lows, and money always goes back to support and resistance. Okay, so now let me show you how to use the indicators. Okay, so let me move this back up here. I always like putting it right here so you could see what candle you're on. Always make sure when you're using the indicators that you have your chart set up on 60. I like moving my quote board right under here so you can see what trade pair you're on and what time frame you're on, and make sure this one says 120, 240, 480, and 720. Okay, so let's put my pointer back. Okay, so when you're working with indicators, which is totally fine. I love working with indicators, especially when let me check on my trade real quick. I love working with indicators, especially during the months of September all the way through maybe June. July and August are very weird type of months. So when weirdness is added to the equation, you have to be extra careful. Okay, so what the first thing you want to look at is find your trend on the chart. Okay, so I'm going to take these off. Let's work with a clean chart. There's a lot of different ways to find trend. Okay, this money street right here, this is called a channel, or the middle of the street. You want to make sure to find out what direction this is going. Okay, so what you have here is this one is going up. I don't know if you can see that, but I'll do this. It's going up right here. Okay, and these are some of the things you need to look at. And then you want to find out what direction the money's going. It should, if you're looking at this, this is going to be the same thing. It's going to be going long. Now, does that mean that you take the trade long? No, that doesn't mean. You need agreement from other friends. So you come over to this indicator. You see how it's moving sideways? That's not good. That means it's in consolidation. Stay away. This one says it's in consolidation, but this one says it's moving up, and so does this one. All three, you need the 60, the 120, the 240, and the 480. You need them all to be facing up. The only one that's facing up is the 60 and the 480. That's it. But these aren't. But good news is here that the back screen of the 120 is already a lighter shade of like this cream color, and so is this. So there is a chance. So when the market opens up here in the next couple hours, when we get some volume, more than likely euro dollar is going to go long. So later tonight, if you want to do some trading and you want to look at euro dollar, make sure these are going long. Now beware. We've already talked about this trade, and right here new highs were created. So once it gets to this point, you're in an area that it hasn't been in a long time. It could easily come up to here, and if you're in the trade, it could bounce back and you can lose money. So make sure it passes this, or just play safe and don't even take the trade at all. And let's see if there's some other trades out there that that haven't created new highs. Okay, so let's go to check this trade real quick. Okay, let's go to US dollar JPY, dollar yen. Okay, I could already tell that this is at the moment not a trade. Okay, my eyes are just trained for it. Okay, now look right here on the money street. We call this the money street. It's already on this side of the street, but it looks like it wants to come down. You see, there's already two signals here that it wants to come down. Okay, look at here. Even the money rope, we call this the money rope. Even the money rope is kind of in an upward position. Look the color of the screen. It's this like pink color, and it wants to come down. This one hasn't turned yet, and the 480 hasn't turned yet. When these turn all the way down, when these turn down like this, down, down, and down, and this one's going down, that's when you take the trade. Okay, so let's say later tonight, let me erase all these drawings. Let's say later tonight, dollar yen happens to be going down. Okay, so what you want to do is go to your 60-minute candle, your 60-minute chart, and this is where high-low is very important. So you want to go to your price retracement. Okay, you go to your lowest here. Oh, that's not one. Whoops. You know what? Let me erase this. Some technical difficulties. Sorry about this. I changed the back screen color, and that's why you couldn't see any of the lines. So take me just a second. That's what happens when you film live. You see all the blemishes, but that's okay. This is a very this is called a Fibonacci tool, the price retracement. Okay. Let's go back here. So let's go to your lowest point. You put your mouse here and you click the left. You come all the way over here and you drag it up to your top, your highest point, which is right here. Okay. So let's say you take your trade, you're about ready to take the trade, and you take it at this line here. Okay. Just to make sure you can see it here. You take it right here. Okay. You're taking it short, right? Just beware. Do you remember how we talked about how money bounces off these support and resistance? So what you want to do is, here's another line right here. What you might want to do is be ready to get out of the trade right here. I make it a practice that if it's struggling to get to here, I go ahead and get out of the trade. That doesn't mean I'm done with it. Just get out of the trade and see what it does. If it breaks this line, I get back into it. And then I find out, what I'll do is I'll find out where the money bounced last. So what I'll do is I'll go to my horizontal ray and go right here, and I'll start looking to get out of the trade there. I'll get in the trade here, and what you do is you find out what line this is. You go right here. Let me see. And this will be your entrance, 107.210. Once it breaks 107.210, you take the trade, and then you want to start looking to get out of the trade at 107.105. That right there is about 15 pips. That's a very, very good trade. Okay, if it goes there, I'll look to get out of it here at 107.035. Now you're looking at almost 20 pips. That's about 18 pips or so. So that is how you figure out your entrance and your exit. Okay. So, and I never let a trade, let's say you get in the trade, it comes here and you get in, it goes backwards 10 pips. That's when I get out. 10 pips is my max. Most of the time you'll find a winner. Once it passes here, that's when I get in. 107.210. If this thing is calling short, I wouldn't want to get in here because the signal just came out. Wait till it gets some momentum and start getting to right here and then take it. There's been some times where I've been in a trade for several hours and I'll get in here and it comes all the way down here. That's why I like to monitor my trades. Look at this one. If you get in here and you're starting to get into profit, what happens if it goes up here? Well, that's okay. It came all the way down back here. So what I do is I like doing a trailing stop. And I'll show people how to do a trailing stop in a video later. That's a little more advanced strategy. That means you can let the trade run and it'll never let you lose money. Okay? So that's how you do the indicators. So make sure if you're going to be trading, like, so now you're in US dollar, dollar yen. Now you go to the next one, euro yen. You see how they're sideways, sideways, up, up. This one's up. Not a trade. Aussie dollar, up. Look at this one. Here you go. This one's going up. This one's going up. This one's going up. And this one just started. This could be a potential trade. Let's look at this. Now, this is on a 60-minute candle. We just got an entry that this is a trade. Now, what I want you guys to look at is we are right here. Okay? The top of the money is right here. It's never been past here in a long time. So if you're going to get in this trade, you can get in it now to go long, but just beware that you have a resistance line right here. So this right here could pay you about 17 pips between here and there. And if it comes here, just beware that it could bounce. But this is definitely a trade that's going long. You're trading with the trend. Look at that. Can you imagine if you would have got in here? Yeah. So just make sure right here it's at a support line or as a resistance line. So see what happens if you're going to get in this trade. Make sure that it goes Let me erase this. I'll get you better. I would wait for you Aussie dollar to go past. Oh, I put the wrong one. I would wait for Aussie dollar to go past 0.70220 before you get in, because right there, once it passed there, it could shoot all the way up. So that's a very good trade. So we didn't even go through 3 or 4 trade pairs and we found another trade. So I have a 6:30. I think we have a couple minutes. Let's go for another one. Pound dollar. Look at this one. We just found another trade. Don't be too scared about this. The reason why this one went sideways is because the market closed. We're in pound dollar. The market just closed for the U.S. dollar, but Sydney just opened, Australia. So, but this is a trade. Now beware on this one too. It's been going up all day and it just created new highs. So just beware on this one. You're definitely getting some, I'd wait for another signal, and I would definitely wait to see what happens. You may want to pass on this one. So just beware, because it's very rough when you're trying to ask a trade to create newer highs. It could have happened, yes. If you go over here and you go to the 480, what seemed like a new high here, look at this. So it could run. This could run. This is definitely high. This was back in June. Let's go to the 1-day chart, 1D. Yeah, so back in March, it was even higher. Let's erase all this. Okay, so back in March 5th or so, it had a high. So does it have the potential to be even higher than this? Yes, it's just been floating sideways for a long time. So that may be a good signal to go long on this pound dollar, because it does have some very old highs. It could possibly get back there. So just wait for the market to open when there's a little more volume here in about a couple of hours. But this is definitely one that you want to practice on for the new guys. The advanced students probably got in the trade way down here, and the reason why I can tell is because back on the 17th, when the money hit here, it bounced all the way up. It came here, it bounced, and it look at this. In the last 15 hours, somebody made a bunch of money. So I actually saw that this morning, and I didn't get in it. I was up around 3 o'clock trading. So, but anyway, same time, same channel tomorrow. That's how you look for the indicators. You look for agreement here, here, and here, and of course here. And also you want to wait for the yellow signal to come out. But all right, guys, it's a weird time out there. I know the country's divided. It's crazy. But we still have to be nice to each other. I'm a firm believer that we're put on this planet to help people that can't help themselves. So if you know somebody that likes Forex, let them know. We can definitely change people's lives, especially with the training we have. I make Forex very, very simple. And this is a very, very complex market. It's also the biggest market in the world. It does $5 to $7 trillion a day. So, but anyway, so tomorrow we will see you. Thank you for hopping on, and we'll see you tomorrow at 6 o'clock. Thank you. Bye-bye.